This is your last margin call with your host, Beck and Tim.
All right, so we finished up week 3 of our fall ER series. It has been a wild week with plus minus 3 percentage days throughout every day. It felt, and there's new news. Everything was stacking against one another. Stimulus deal failed to go through, and then all of a sudden, elections starts to come into factor and everything else like that. What we had to do through all that is try to create ER plays that could not only handle that type of volatility and that type of range, but also then play to the actual symbol itself. And what felt like just insanely frustrating the entire week ended up being a really good week in terms of just managing risk, number one, being profitable, number two, and just kind of using a little bit more complex strategies that really helped handle the type of volatility with these plays. I'm only going to go over quick things. I really want this video to be super short in terms of explaining things, but one of the more complex strategies, instead of just going into verticals in calls and puts, the ones that we kind of went into, we're going to go into one that we ran on Boeing, which was a double diagonal. Okay, so one of the things that we wanted it to do is we were going to buy a straddle this week, or last week, so October 30th, and we bought it right there, right before ER, which was 157. And so a straddle is you want it to move away from 157. You don't care which direction whatsoever, as long as it gets its butt moving, essentially. And then what we did for this week is you put on a selling, where you think it won't accomplish by the end of this week. All right, so now we're towards the tail end of this, the play that we put on. And so we ran a double diagonal across the 157s. We sold the 140s, and then we sold the 185s, which is right around the 200 day. And that's where we really wanted to target, because if it's going to pop all the way up, it's going to meet some resistance there, a little bit of psychological resistance, if that's where people want to buy, sell, and determine that. So it's going to be a contention area anyway, regardless. The reason why we targeted 140 was obviously because of this area right here on the chart, and we said, you know what, that's where it'll end up going. It'll find support there, because if it gives that up, it's probably going to go a little bit lower. All right, so we ran that. We got the movement we wanted on that double diagonal for last week on the 157. It moved. It got to hustling. All right, and that's kind of one of our bigger plays that we ended up rolling on this. And you made we made 145, or excuse me, 400, not 100, $425 just off of that movement alone, because it was so massive. And then there's still time to collect off of this week alone. So what we wanted to accomplish when we set this up, let's just think it from a mental state of, we want volatility, we want movement, we don't care about the direction, we just want it to move. And that's what we expected from Boeing, because it's been in consolidation for so long. It's gonna move. And if it doesn't, we just need it to move outside of it. So our break evens on that was about 150, which is kind of right where the cursor's hanging over. And then we had a little break even, which was right above 170. So right, still within there. So it just had to break those to get profitable. And it got outside of that. So that's how we set that up. The double diagonal is playing off of the volatility. It's going to playing off of IV. And if you don't understand those terms, just think of the word movement, okay? So that was one of our bigger winners. The other one that we did on here was Apple, all right? Apple was basically the same thing. I believe it was trading at, where were we at? We were at about 115 when right before ER hit, and we ran almost a near identical play that we did on Boeing. We said, all right, either tech is going to absolutely explode off of this, or tech is going to poop the bed. All right, tech ended up at pooping the bed, but that's okay. We didn't care. We wanted it to poop the bed or utterly rock it. We just didn't want it to not move. So this one worked out really great. On this one, I believe what we had and we sold is going to be buying the 115s for this week, or last week. I keep on saying this week. I keep stuck in that mindset. 115s for last week. So we wanted it to move. All right, so it's playing off of, if you kind of want to know the general gist of the movement that you needed, you play off the implied move, and then you just plus or minus to the current price that it's at. Then we sold the 105s. We sold the 125s for this coming week. So now it's in the same position that Boeing is. It went down. It's heading towards that area, but the reason why we picked that area is 105. So right there, heading into the gap, but that's where it found support after the September lows. That's why we targeted that area. Okay, so it could do that. With that one, I believe, what did we do? We collected, it was a few hundred off of that. I think it was like 200 plus. So 200 plus. So right there, the loan, that was our 600 bang right out the gate. We did awesome. We did great. And those are a little bit more complex strategies. Same thinking as Boeing. Get the price moving. We don't want it to stall, and we don't have to pick a direction. So those are great. One of the things that I really wanted to show in terms of expansion, I keep on doing it in quotes because that's how FinTwit works, is you get to just throw quotes and you don't need to really explain things. This is one of the double diagonals that we ran off of Intel the other week, if you paid attention, we had a 51 put that we were selling or bought for this week. We sold the 51 last week. You took a minor hit off of the buying it back, but then you let this one ride. All right, and this one rode. So they turned into be a what? About like a 15, we'll just call it a 15 bagger. It's not actually 15, it's a little bit lower, but it's about a 15 bagger, which means about 1,500% that you make on that, which is really freaking nice. It really helps the statistics in terms of profitability, going on and letting your winners run, and also managing risks in case you get utterly destroyed on these plays. So we did run into a lot of problems in terms of iron condors getting blown out of the water. Lily was one of them. All right. We sold a 135, I believe, on there. Actually, no, it was 130, or it was 135, 130 off of that. And it just blew it out of the water. And so but we managed our risk. We knew what we were going to lose even if it did do that. There's at 291 that we took a loss on that, which is a lot, right? It's comparatively to other things, but we kept everything else small. We ran a Broken Wind Butterfly on Facebook to make sure that no matter what, even if it dropped, we made like $50 on it. So we got the credit. We kept the sell side strikes and the buy strikes close to make sure that we get that credit to the downside, but also moved it up in case it did have this all-time breakout that it could do. And what we wanted to do with that was exactly that: protect the downside, get a nice huge profit spike if it did spike. But if it didn't, you know what, you're walking away with money, you're covering commission costs, and you're getting a little extra in your pocket. So there's good things with both. All right. In terms of that, I mean, other than that, you get these little tiny little hits, like $10 losses, $6 losses. You make a little quick $100 off a shop. You make $100 off of $130 off of Starbucks. These little base hits, and then you get these one little runners that these happen that make your week. And I think what we ran away with is a little bit over $1,200 on this. We shot about 55%, which I know when you're thinking 55%, that's really not that good. And you're flipping a coin, you're basically getting that, but you found an edge. Even if you get 51%, you have an edge over that. Okay. But you just have to just wait for them to play out, and you play the high probability setups, the ones that are, you're shooting 80% going into there, and then just magical things happen where you get 2-3 days in a row where it's -3%. And we still survived, we still made a profit, and we still shot 55%. So that's a plus. All right, next week is going to be the election week. It's going to be crazy as hell. Things should be moving, or things maybe aren't moving and they did their movement already. Either way, our motto is sell premium into ERs, make your money, make the high probability trades. Don't look for home runs. If you get a home run, let them run. And that's how we handle ERs. All right, so I think total for the entire ER season, where do we have it? $200 from the first week, minus, we'll just do $800 from there. We had $600 loss, so you're at about $700 total for the ER series if you took every single play. There's no cherry picking results. It's always until the play is taken all the way to expiration. There is nothing you can do in between to make sure that there is no bias. There's no look what you could have made type events. So we'll see how next week goes. We'll try to add to this, and we have to break the total of 2,000 from our summer ER series. And I got my fingers crossed. I think we could. There's a couple big movement plays that could be happening next week. We're not going to shoot for them. We're just going to continue to nail the plays that we feel have a high probability. All right, so we will see you then.